I think one of the most important elements when we're talking about personal finance in general is the idea of control. I think one of the biggest problems that we have in this world is the fact that people's money is not in alignment with their own values and beliefs. People's money is not helping them get to the place and to create the life, helping them create the life that they want to live. And ultimately, if you are not intentional about how you're utilizing your money to get to where you want to go, well, then you're never going to succeed, because if you're not living by your plan, I promise you, you're living somebody else's plan. So in this video, what I'm going to do is I'm going to talk about why I believe whole life insurance, out of all assets in the world, why I believe whole life insurance is actually the foundational asset that will make potentially the biggest impact in your life. And I know that sounds like a shocking statement, but I promise if you stick with me, it'll make sense. If you haven't already, make sure you subscribe and hit the bell, that way you're notified every time I launch a new video. Let's go. Hey, what's going on, Cashflow hackers? It's Chris with Life 180, and you know what? That was a big, bold hook, right? Like, we're talking about whole life insurance being this like wildly powerful asset that can make a huge impact in your life, that can help you achieve your dreams and help you accomplish the life that you want to live and live the life that you love and all these things, right? How can that be? How is it most people think of whole life insurance as just this insurance product, as this kind of like necessary evil to a certain extent? And some people would even argue it's not even that, it's just an evil that you don't need. It's an unnecessary evil that people like Dave Ramsey and Susie Orman would say, well, whole life insurance is the worst product in the world, and you should just buy term insurance and kind of go from there. Well, here's the deal. I did a video a couple weeks ago talking about Tony Robbins and his 6 basic human needs that we all have as we go through life. And this is something I worked on a couple years ago, and it's something that's been coming into my heart and into my mind a lot recently. And it's the idea of talking about certainty. And if you go through Tony's stuff, he talks about how certainty is actually one of the top human needs that we all have. Now, I happen to have a very low need for certainty compared to most people. I deal with a lot of risk. I deal with a lot of variance in life. I played poker for a living, for crying out loud, in my 20s, right? Like it's these kinds of things, and I'm an entrepreneur, and I love risk, and I love taking risks. But at the end of the day, we all need to have a certain level of certainty. And I would argue that the more of a stable foundation of certainty that you can build, the more it allows you to go out and take big swings to accomplish amazing things and to create the life that you love. And I can say for me, it's been huge, because the more success I've had and the more stability I've had, i.e. certainty, the more confidence it gives me to go out and take bigger swings in areas that I believe in areas that are going to help me actualize and create the life and the business and the freedom and the family and the time and everything that I have in my life that's important to me, that I value. I'm able to live intentionally and go out and create those things. And it was one of those, it's a topic that for me in the past, I would downplay the importance of certainty. And when I say in the past, I mean like 15 years ago. And I would say, listen, I had kind of no respect for money because I was playing poker for a living, and I was doing really well playing poker. And to this day, I never really worried about money. And I would say in my 20s, I did not have a healthy respect for money because I never really worried about it. I never really worried about my ability to make it or earn it or whatever, because I always knew I could just go and make money doing my thing. And so, when you have that and you don't have a healthy understanding of money, it leads to a healthy non-respect, or an unhealthy respect of money, I should say. And that's what happened to me, though, is then life happens, right? And they shut down online poker, and I was throttled with uncertainty. And then I got into the business. I started doing well, and then everybody knows my story if you've been on this channel. And I left the index universal life industry, and I walked away from a bunch of money to do what I felt like was right and in alignment with my moral compass and my values and my beliefs and how I wanted to show up in this world for people. And I was throttled into another place full of uncertainty. And so it was a struggle, and I did things, and I stayed true to myself, and I stayed true to my values and my compass. But what I can tell you for me is that the longer time has gone and the more I've kind of like held on and just fought for success and fought for my values and my morals and my beliefs and everything that I believe this industry is all about and why I feel called to be here and do it, the more I realized as I have more success, it's a compound effect. And I think what you're gonna find, and like I think this is important to understand this as I get into this, is the more certainty I started building, the more confidence I had, because I knew I could go out and take risks and I didn't have to worry about winning every single time I had a business deal. I didn't have to worry about closing a sale every single time I had a conversation with somebody. I didn't have to worry about myself. I could really truly put my heart and my energy into serving people. And I think if I really am to break it down, this YouTube channel has been a big part of that for me, because it's created that certainty. It's created a platform so I can create enough momentum and enough success that I genuinely am able to show up in this world as the person that I want to be. And that's all because I have a foundation of certainty that I don't have to worry about survival. I can focus on thriving, and I can focus on paying it forward and serving the world in a way that's truly in alignment with my values and my beliefs, and that's fulfilling to me. And to me, that's a huge thing, right? And so now when we look at our life, I mean, let's be real about it. I think every single person in this world will acknowledge that financial certainty is a huge part of the certainty. I mean, we have the need for certainty with our living situation, certainty in our relationships, certainty with our finances. I think when we look at every angle of our life, there's always going to be a foundation of certainty that we all need. And so from a financial perspective, since that's the purpose of this video, let's talk about the idea of certainty. Now, one of the things that kind of drives me nuts about the personal finance space is this lie that everybody is told. And I understand the lie. I understand why the lie was created and how it kind of perpetuated itself. But that lie is the younger you are, the more risk you can take. Well, the reality is the younger you are, the less risk you have to take. And in fact, the younger you are, the less risk you should take, because you have time and compounding on your side. Now, I get why people say that you can and should take risk when you're young. I understand why they say it, because you have more time to make up for losses. But at the end of the day, when you're young, if you understand compounding and how uninterrupted compounding is one of the most powerful things in the world, then you understand one of the most important things you can do when you're young is to avoid those losses and to put your money into a place that is going to secure your financial future. And I think what I love, and I do a thing here called the Life 180 Pyramid, right? And so when I look at the Life 180 Pyramid, I'm gonna pop this up here. When we look at the Life 180 Pyramid, I talk about this a lot, is you build a pyramid from the bottom up. You need to build safe money. If we talk about this being a financial pyramid, we got medium risk and then we have high risk. Unfortunately, most people right now in the world, especially the United States, are living their life upside down. It's an inverted pyramid, right? Because we're told the younger we are, the more risk we can take. And so what do? Rather than saying, hey, slow and steady wins the race, and I'm gonna go out and take this safe money, I'm gonna go out and I'm gonna build my financial foundation so then I can go and be a good investor. People are told that they need to save for retirement, but they're not really saving for retirement. They're investing for retirement in their 401ks, IRAs, qualified plans, Roths, things like that. But they're told, hey, just buy and hold and just ride the market ups and downs. And if you're there long enough, you'll be good to go. But the problem is, if you don't save enough money, what's gonna happen is over a 30, 40 year period of your career, you're gonna have challenges. And what happens is when 40% of the market goes down and you lose your job and you have no safe money and your whole financial future is based on this one little point of instability of these assets that are full of volatility, you're not really an investor, which an investor would say, hey, let's build our financial foundation so then we can go out and take some risk. That way, if, for instance, we have some high risk stuff, let's just say we have the foundation built and then bang, the top of this pyramid of our financial pyramid gets just destroyed and lopped off, and the market gets a big recession, and we go through a 40% correction like we did in 2009. If that happens, well, it's fine because we have this foundation of stability, and we're going to have 85% of our total assets there or whatever. But over here, when the market tanks and we don't have any safe money, what happens is this point crumbles, you lose your job, you're relying on this, and the whole world falls over. And so one of the things that I tout about the powers of whole life insurance and the reason I think it's so important is because no matter what stage of life you're in, you're gonna want to benefit from it. You're gonna want the benefits that come from whole life insurance. When you're young and you're going after it, you're gonna want savings, right? Like I just put in the pyramid. You're gonna want savings, liquid savings account. Now, a lot of times people say right now they're gonna put money into a high yield savings account at a bank. And that's true. Like I'm not gonna sit here and try to convince anybody that a whole life insurance policy starting year one or starting in year 1 through 3 is gonna outperform a high yield savings account. It's not going to. High yield savings account you can get at the time I'm filming this video 4.5% to 5%. That's really good. But if I talked to you 2 years ago, that would have been like 0.1%, maybe 0.2%, right? For a high yield savings account, all the while in your whole life policy, you'd be doing really well, right? And from a long-term perspective, because we have to realize we can't solve long-term problems with short-term thinking. This economic environment that we're in is not necessarily going to be consistent. We have to look at what's going on and realize that over time, the market is going to go up and down, up, down, up, down, and that we realize in that period of time, interest rates are going to go like this, right? And sometimes the tail or the curve is going to be longer than others. Right now, we are in an increasing environment. For the last 30 years, we've been in a decreasing environment, and then I don't know how long rates are going to go up for, but during these increasing rate environments, whole life insurance always tails the fixed market, and it always tails the performance of more fixed products like bonds, CDs, high yield savings accounts, stuff of that nature. But at the end of the day, the principle of thinking long term is still there. So when you're saving, think about getting your dollars to perform multiple functions. And that to me is everything, right? Getting our dollars to perform multiple functions is a form of leverage, and it's a form of leverage that is safe because there's no risk in the leverage and putting your money in there. The only downside to whole life insurance and the leverage is that you have a short-term liquidity crunch, right? But if you think about on the other side, like instead of putting $10,000 a year into a savings account earning 5%, what if I put $10,000 into a whole life contract? And let's say that I only had access to $9,000 out of that $10,000 year one, right? But here's the deal. In the high yield savings account, I don't have everything, I don't have any extra benefits. I only have the cash, and any gains that I have on that is taxable, right? But in the whole life policy, I lose $1,000 liquidity, but now I have all growth from that point forward is going to be tax-free. I have a long-term internal rate of return that's likely, extremely likely, and historically proven to beat high yield savings account from a long-term perspective. A product that will even compete with bonds on a long-term basis. And when I say long-term, I'm talking more than 10 years. And we're talking about a product that's going to give me a death benefit. It's a self-completing plan. Even if you're in your 20s right now and you don't have a family, chances are most people want a family at some point in time, right? And so you're going to want to create this foundation when your insurance is the cheapest, where you can save your money, think long-term, and then you have insurance when you need it as you get older. And then when you have that, now you get married, you have kids, you have the insurance there. Now you get older, the kids go to college. You have access to something that you could use for paying for college for your kids. And then as your kids get older and you hit retirement, now you have a source of funds that you can use as a volatility buffer, right? And now you can, as you use it in retirement for a volatility buffer, the one thing that we know is we're not getting out of this thing alive, right? And chances are we're gonna get sick. Chances are, and this is just statistics, I don't want to be negative here, but 70% chance you're going to need some sort of assisted living before you pass on. That's just math, right? If you wait to deal with that fact until you're older, it's gonna cost you a fortune. You can address all that with whole life insurance right out of the gate, right? It solves your short-term need for money, and it's gonna provide all these areas where all these needs of your that you're gonna have as you go through life are gonna be covered, and you know that they're gonna be covered. So now let me bring this back to the topic of this video, certainty. And the fact that when you have more certainty about the areas of life, the variables that you're inevitably gonna face in life that will inject uncertainty into your life, if you can check those off the box, what that does is it enables you to not worry about them, and it enables you to move forward with more confidence, with more trust. It enables you to go out and actually be this investor, right? Goes out, be this investor, because you know what? If the market goes down and you lose this amount of money, well, if you still have all this, you know it's not gonna hurt you, right? But if you're moving forward and you're worried about this falling apart on you and your whole financial world falling over, you're not gonna be able to move forward and show up as the best version of yourself. Now, one of the things that I also think to be true, and I think this is so important to understand, and I wanna go back here and I wanna show this. When you focus, I'm gonna write it over here. When you focus on the financial pyramid, this is so vital to understand. When you focus on this safe money before doing any medium like long-term stocks, and then the high risk, like we're talking like penny stocks and crypto and stuff of that nature, when you focus on this safe money, here's what I love about this, especially when you're young and you focus on the principles, the financial principles. Read Ray Dalio's book, it's amazing. And you focus on these principles of saving before investing, but saving with the intent of investing. The nature of trying to fill this in with money, and like literally, like think about this as I'm coloring it in, as saving this money, and we're filling it, we're saving money every single year. And if I were to make this completely white, which I'm probably not gonna be able to do because it's whatever, but like let's say I was able to fill all this in. By the time this is full, the process of doing this is a journey. Make no mistake about it, life doesn't exist on a spreadsheet, and so your money shouldn't exist just on a spreadsheet either. Your money should be completely in alignment with your values, your beliefs, your goals, with the intent of helping you accomplish the life that you love, right? And here's what I know to be true. The process of doing what I'm doing right now and being very tedious about filling in all the holes and making sure your savings is really good and exactly where you want it to be to build your foundation, this process of doing this is gonna create you and turn you into somebody that you're not right now. One of the favorite quotes that I heard in life, and this is something honestly that had a massive impact on me in my life, and that was, Chris, you are where you are in your life because of who you are, period. If you were better, if you deserved more, you'd have more, right? And that's a hard reality check. We all have to kind of do that internal work. And I'm gonna say the same thing to you that my mentor said that was like a kick in the gut when I heard it. Is like, you are where you are in life because of who you are in life. And the thing I love about whole life insurance is that it's a self-completing plan. And if we use it and stop thinking about life insurance as an investment and start thinking about it as a savings alternative. And when you think about it in those terms and you really come at it, you're building your foundation. The process of this, it may take, right? It may take you having the ability to delay gratification. And instead of, your first 10 years, if we have a 10-year period here, instead of trying to get, like 8 to 12% and people talking at the water cooler at work, going there, maybe you have to earn just, 4% during that time. Maybe that's the thing. But if I said to you, putting money in here may look better on a spreadsheet, well, what happens when the market goes down if this one keeps going, first of all? But more importantly, what happens with this 4% when you have access to it and you're going through a process and it builds a foundation and it gives you more certainty and it puts you in a situation where you are now looking at this and you're realizing, wow, my human life value is something else, right? Like, I realize the value I bring to the world. I realize the value I bring to my family. And so that value, I should have it insured. So, okay, that's a good thing. But on top of that, having access and control of your capital, the number one asset that you should ever invest in is yourself. And I think when you start realizing like when people like me start going like, no, I would never put a dime in the stock market. The reason is because like if I can't earn 8 to 12% investing in myself and investing in my businesses and the projects that I have to work on, well then I should just like give up. Like, because like there's no guarantee we're gonna make that every single year, but over a long period of time, if you invest in yourself and you create yourself as an asset, which by the way, as you go through this process, like I was saying, filling this in, you're going to become somebody else. You're going to grow into who you want to be to live the life that you love. And the chances are you are not there right now, but you gotta be willing to slow down to go fast. The biggest problem people make in personal finances is they go out and they say, hey, the younger I am, the more risk I can take. So when they're 20, they go out and they invest in cryptocurrency. And not that all crypto is bad, by the way. I like crypto. I'm a big fan of Bitcoin. But if you're going out and speculating on Bitcoin and putting it into assets, you know, that you really can't afford to lose, well, then that's just a financial mistake. Now, am I going to sit here and say you can't get lucky? No, of course, you may get lucky. There are plenty of people that do. They take a swing, they hit a home run, and they get lucky. But more people take a swing and they strike out on stuff like that. If I could tell you the amount of stories I've talked to from people in cryptocurrency that put, you know, the first $10,000 or $20,000 that they had in their 20s into Bitcoin, and then they lost it in a Bitcoin mining scheme, or they lost it in some altcoin or something else like that nature, it's because they were going out and they were focusing on chasing returns and not focusing on financial structure. And at the end of the day, my encouragement to you is thinking about, make sure if your money isn't helping you grow to become who you want to be, to live the life that you love, then you shouldn't do it, quite frankly. That's just it. So anyway, I'm done with my rant. So hopefully you found value in that. If you did, please like it, share it, get it out there to people. If you haven't already, make sure you subscribe, hit the bell, that way you're notified every time I launch a new video. I'd be really curious to hear what your thoughts are on this. Is your money in alignment with your values and your beliefs? And is your financial strategy helping you to become who you want to be? Tell me in the comments below. Have a blessed, inspirational day. We'll talk soon. See ya.